Okay, let's get started. Thank you for coming that second session of today. It's the first industry session. The title of this session is Towards Sound Blockchain-Based Financial System. That we have that 1, 2, 3, 4, 5 panelists from your 4 organizations. From Casper Association, we have that Mark Winsdale and Matthew Dory. And from Circle, we have Lurio. And from Recruit, so we have Junpei Miura. And from DCAL to DCP, we have that Hiromi Yamaoka. So I'm a session chair of this panel, Shinichiro Matsuo. And it's a 60 minutes, 1 hour session. And I would like to have in the first half of this session, so I will ask for organization, Casper Network, Circle, DCAL, DCP, and Recruit to provide presentation on that recent activities of our business. So each presentation should be maximum 8 and 10 minutes, and followed by the discussion on the current problem or difficulty or issues in the blockchain-based financial ecosystem. Then, so if we have time, we will discuss about role of industrial sectors to achieve soundness, and we will discuss expectation to begin. Okay, so let's get started with the Casper Network. So Mark and Matthew, please start your presentation.
Okay. To the entire screen rather than. Okay, can you see my screen?
Yep. Go ahead.
Yep. Okay, so my name is Mark Greenslade. I'm head of R&D at the Casper Association. The Casper Network is a layer 1 blockchain. I'm here with my colleague Matt Doty, who's a R&D consultant specializing in DeFi, and I don't really want to talk too much about the network itself. That's a layer 1 blockchain network. There's several of them out there. Obviously, it's got a general purpose virtual machine. You can run smart contracts in that. The virtual machine is WASM based. It has a proof of stake mechanism, etc. So, and it's kind of evolving over time in terms of its capabilities and feature set. But as an R&D activity, we need to have a focalizing use case that we can innovate around. We have a fairly constrained budget, so we have to, spend our money wisely. And we take seriously financial standards, and we take seriously integrity of financial contracts. And so we have taken an off-the-shelf financial standard called ACTUS, which stands for Algorithmic Contract Type Unified Standards. This standard is emerging. It's in the process of being fast-tracked by ISO. It's still in extended feasibility mode. It hasn't made its way into large-scale production systems, but we do believe that it has some properties that are useful to us. Effectively, it's a taxonomy of financial contract types, which cover approximately 99% of financial contracts in existence. The contract types can be issued either in isolation, so for example, a loan, a simple loan, but we can also compose structured products or composite contracts. So it does support this notion both of issuing contracts in isolation plus composability. And then we want to take this emerging financial standard, which has been incubated by a team of economists in about 2010 in response to the 2008 subprime mortgage crisis. We want to take that this financial standard and apply distributed ledger technology plus other cryptography or distributed cryptography, and we come up with this notion of verifiable financial contracts. And this is really the focalizing use case for our R&D team. The kind of solution space has 3 pillars: payments, tokenization, and integrity. Now, payment systems are fairly well known problem space. Obviously, with the kind of advent of zero knowledge proofs, for example, we've got some new tools there, but it's a pretty known space. For the tokenization, what's a little bit interesting here is that the ACTA standard mandates for each financial contract type not only the machine readable terms for that particular type of financial contract, but more importantly, and this is the kind of secret sauce of the standard, the algorithms used to derive the cash flows associated with a financial contract. And on either side of the cash flows will be counterparty sets. So the tokenization model in this setup is slightly innovative in the sense of really the underlying is a series of cash flows. And we are kind of supporting this notion of mutable counterparty sets that have exposure or responsibilities in respect of those cash flows over time. So the payments engine requires the tokenization pillar, because whenever a payment needs to be made in one of these, in an element within the sequence of cash flows, then it will need to interrogate the current state of the tokenization contract to understand the relative exposure and responsibility of the counterparties at that moment in time when beginning to open the various payment channels that will need to be serviced. So, and then if there are defaults in those payment channels, it will need to send signals accordingly. But, tokenization is a fairly well-known problem space. So, both payments and tokenization in this setup are not that innovative or interesting, but the integrity layer is, I think. So let's drill down into that a little bit. So this ACTA standard, talks about counterparties, it talks about terms, financial contract terms, talks about the algorithms, and then the cash flows, which are the output of the algorithms. And we take those artifacts which are coming out of this standard, and we, derive cryptographic proofs in different dimensions. The signatures, attestations, of course, fingerprints, of course, but there's also now zero knowledge proofs, of course. The zero knowledge proofs can be pertaining to the attestations by counterparties, but also to the algorithms used to compute the cash flows associated with a term set. So it's like a form of computational integrity. And we can put those proof sets onto a ledger. Can be the Casper ledger, for example, could be other ledgers. We are fairly chain agnostic in the R&D team because we do think that this standards-based approach should be amplified across the blockchain space. So we don't want to be kind of maximalist in some of our solution kind of in terms of solution space. So the artifacts coming out of the ACTA standard, establishing cryptographic proofs over those artifacts, and then submitting them to blockchain. And that gives us kind of an integrity layer for financial contracts. I should note that not only does this apply to individual financial contracts, but also the portfolios in which those financial contracts are represented. So we would imagine that we will have recursive proofs over any financial portfolio in which a financial contract finds representation. But also it's worthwhile noting that obviously financial contracts are dynamic. So if, for example, in the context of a loan, there's a change of interest rates and it's a variable rate loan, then the algorithms need to be executed to recompute the cash flows. So these are dynamic. So the proof sets are dynamic in response to environmental triggers, or sometimes behavioral triggers in the case of a default, for example. So that's like the integrity pillar. Just drilling down a little bit into the tokenization pillar, we're going to be minting tokens, but they're over financial contracts. So we need to be recording the counterparties, the direction of payment obligations between those counterparties, the units in terms of the underlying that will be settled, and then obviously metadata. We post that on chain, and then that can be serviced by auditors, rating agencies, regulators, and markets. So, you can establish secondary markets. So, for example, you could have like a bond issued through this platform, and then there may be 3 banks issuing that bond at time 0, and then maybe some further down the line, one of the banks has the right to enter a secondary market to sell their portion of the bond to another bank, for example. So that's kind of servicing and how the tokenization model is utilized in that context. Payments channels. So we're taking these act as cash flows, which have the direction of the flow, the amount, denomination, the obligor identity, and then we can push that through a payments engine. Typically, it's going to be hybrid, but it could be fully on-chain and interact with a set of smart contracts to send signals around like opening channels, verifying counterparty identities, that kind of thing, and then opening, closing those channels, handling defaults, that kind of thing. We have some principles that we try to follow. One is Occam's razor. So DLTs are not very good environments for putting data, really. So we want as little as possible, as much as necessary. As I said earlier, chain agnostic. We want to emerge not only embracing this actor standard, but we want to amplify it across the blockchain space. So we do think there will be a new set of standardized smart contracts coming out of this work. Privacy preserving, obviously, there's a lot of sensitive information flowing around here. And trust but verify. So cryptographic proofs everywhere. We have a lot of new tools coming into the kind of solution spaces now with zero-knowledge proofs, multi-party computation, fully homomorphic encryption. So we need to be utilizing those tools. We have challenges, regulatory certitude, obviously. We're not exactly quite sure, how fully we can explore this solution space because the regulatory environments are somewhat heterogeneous. Counterparty risk, we are dealing with cash flows. These are future payments, so there is always counterparty risk. This is not a simple asset-based system. This is obligation-based system. Obviously, if we want to do something for the long term, we've got to take post-quantum security into consideration. And then jurisdictional anchoring. There will be a requirement to accompany this system or augment this system with smart legal contracts, because no financial contract is issued in a jurisdictional vacuum. And we need to embrace that from day 0. So we imagine a system where there will be jurisdictional partitioning, and so any financial contract can be anchored in one or potentially many jurisdictions. And just to underline the fact that there will be technological flux, but we're trying to do something that's going to be multi-decadal, very much standards-based. So if you do go into a browser and just type Actus standard, you will come up to the homepage of the Actus Foundation, which is completely independent of Casper. We are doing collaborations with both the Cardano network, possibly Algorand, to try and bring together a coalition of blockchain foundations working with the Actus standard folks to try and kind of make this a reality. Yeah, so I'm very happy to share that with you.
Thank you very much. Okay, so I would like to switch to the next presentation by Sako. And so Lurio, so could you share the recent activity of Sako, or also some update for your business?
Absolutely, and it's a pleasure to speak to everyone. Unfortunately, I do not have a presentation ready, but I'm very happy to speak about Circle, and I'll do so in just under 8 minutes. So firstly, I should introduce myself. My name is Leo Vargas. I'm a director on the global policy team for Circle. So Circle is a global financial infrastructure and technology company. We were founded 10 years ago, so 2013, celebrating our 10th year anniversary this year. When you're trying to kind of understand the products and services that Circle develops, it's really probably helpful to think of them in kind of two buckets. Number one is stablecoins and stablecoin protocols, and then a separate series of kind of Web3 broader services. So if you're in this room, there's probably a high likelihood that you're familiar with our kind of flagship stablecoin, USDC. So we're the issuer of USDC, regulated full reserve dollar digital currency or stablecoin, 100% backed by cash and cash equivalent instruments. We've facilitated more than $12 trillion in on-chain transactions in the 5 years that USDC has been live. We also have a euro-denominated stablecoin, EURC, that we issue and operate under the same guiding principles as USDC. And so, our vision for USDC is really being the basis for an evolution of the financial system that involves low cost, easy to use global payments for practically everyone, practically anywhere. And so, within that kind of cohort, we're developing technologies that are kind of helping propel USDC forward and make it more easy for businesses and developers and end users to interact with. So we're supported on 15 blockchains. Obviously, we're bridged to numerous other blockchains. And I should say, we actually just today released something we're calling our bridged USDC standard. So this is a specification and process for, chains that we do not support natively today to issue USDC in a bridge capacity such that in the future, Circle has the optionality to upgrade seamlessly to a native issuance of the token. So that's something that we just shared today that we're really excited about. Another kind of tool that we're pretty proud about is something called our cross-chain transfer protocol. And that basically enables USDC to be seamlessly kind of flowing between different blockchains and all of the kind of minting and burning activity to be, handled directly by Circle, right? And then, of course, for businesses and enterprises, market makers, we issue our Circle Mint, used to be called Circle Account Service, for kind of direct access to USDC and EURC liquidity. So that's our kind of stablecoin and stablecoin protocol series of products and services. We have a second category that we've really started fleshing out this year that we're really excited about, and it's called our Web3 services solution. So kind of the probably most notable instance of this to date is programmable wallets. So basically making it really easy for developers that are more familiar with kind of the Web 2 paradigm to build in kind of native, fully functional, robust digital wallets into their tools, into their apps. We're really proud. Our kind of first marquee partner for deployment of programmable wallets is Grab in Singapore. So they're piloting their Web3 app using our technology. We have a solution called Gas Station that's enabling gas-free abstraction. So all transactions can be paid for using USDC. And then we also have a smart contracts platform solution. So, really Circle's purpose and mission is to create kind of the highest grade tools that are going to allow digital dollars like USDC, like EURC to be more functional, to reach more users, and just to be, as frictionless as possible. Thank you.
Thank you very much. And I would like to switch to that Hiromi Yamaoka-san, Declared DCP. And please start your presentation.
Thank you very much. Do you see my slide from your side? Is it okay?
Yes.
Yeah, thank you very much. My name is Hiromi Yamaoka. I'm now working as a chairperson of the Digital Currency Forum. It consists of over 100 companies in Japan, which include the Japanese mega banks as well as leading companies in Japan. And we are trying to create the blockchain-based digital currency platform. And this digital currency is scheduled to be initially issued by banks. So this digital currency platform could be regarded as a tokenized deposit. Of course, our platform could be used for the stable coin type productions, but initially we are planning to that digital currency DCJPY initially issued by banks, Japanese banks. And we'd like to, share our views and opinions with a variety of entities in Japan. And now our digital currency forum is producing the DCJPY network. And DCJPY is, as I mentioned, that the tokenized deposit type digital currency, which will be issued initially by Japanese banks. And this DCJPY platform consists of two-layered platform. And first layer is the core parts of the DCJPY. It is it deals with interbank transaction or interbank settlement or payment of the DCJPY. And the upper area is the business area. We could incorporate the blockchain technology in order to facilitate the smart contract in order to satisfy various business needs. That's the basic concept of the DCJPY. And we are regularly publishing the progress report and white papers in order to share our knowledge or experiences with a variety of entities in Japan. And last month, in October 12, we announced to launch the first business use DCJPY. And DCJPY network to be launched in July 2024 by GMO Aozora Bank, GMO Aozora Net Bank. And of course, if we try to, realize the decentralized infrastructure, we need to find the solution and we need to find the business needs which would be suitable for the decentralized type technologies. And one of the major candidate is carbon emission trading. Yes, because carbon emission trading is a bit different from the traditional type of trading. Because in the case of corporate bond or securities or stocks, those securities will be issued by fixed entities at the fixed timing. So the centralized technology would still be useful. But at the same, on the other hand, carbon emission trading, if we think about the carbon emission trading, carbon emission right will be created on ad hoc basis by a variety of entities. So we believe that the decentralized type technology would be one of the possible solutions. So in July 2024, the DCJPY will be launched to facilitate the transaction of the carbon emission right. And Japanese company IIJ would issue the carbon emission right. And in order to make a transaction of those carbon emission right or environmental value, we could use DCJPY platform in order to synchronize the payment and settlement and the transfer of carbon emission right by using this DCJPY network. And in terms of the technological aspect of DCJPY platform, we are regularly issuing a white paper on the DCJPY. And this is a basic framework of the DCJPY platform. It's a two-layered platform. On the business zone, we could incorporate the smart contract technology in order to facilitate various business needs. And in a financial zone, it's a core layer. We make a settlement of the DCJPY among various banks. And we call those ecosystem of the decentralized technology as AMIC, AMIC. It consists of asset, money, ID, contract. In order to facilitate the decentralized transaction, of course, the asset is important and the money, settlement payment is also important. But yes, in order to facilitate those kind of transactions, the ID will be a key issue. ID is quite important. And of course, we need to facilitate the smart contract in order to enhance the efficiency of transaction. That's what we are now trying as a digital currency forum. Thank you very much.
Thank you very much. And the last presentation is from Recruit, Junpei Miura. Okay, cool.
Yeah, thank you very much. So let me explain my background first. So my name is Junpei Miura. I'm currently working in the Recruit group, but for long years, I was in the position of the regulators community. So I experienced the senior role of the financial supervision and the financial regulation. Around 3 years ago. So I contributed to the establishing the BGIN as a regulator. That's why I'm continuously attending the BGIN meeting, and I still continue to contribute to the discussion of the BGIN. This is my background. As for as I mentioned, I'm working in the Recruit group. Let me explain our company profile first. So Recruit group is originally a HR service provider, which is not directly relating to the blockchain business itself. But of course, we are providing the HR services also, or along with the providing the SaaS-related services for SMEs, business efficiency, providing this very smooth, encouraging the smooth business condition for, especially for the SMEs, such as the restaurants or beauty shops, etc. So on the other, as well as this, so we also providing the payment-related services in the context of the business efficiency of the shops. So currently we have been running the joint venture projects for providing the e-money services. Along with the MUFG, which is the biggest bank in Japan. So Mitsubishi UFJ, we are currently on services of CoinPlus and wallet services for e-money services. This is not relating to the blockchain type of service, purely digital money services connecting with the bank account and etc. So this is the current Recruit position, but I think the important point is our company is providing services envisaging the future aspect of the lifestyle of the people. So in this context, so as mentioned, so we are originally a HR service provider. So we are currently envisaging the change of the people's working style or the lifestyle itself. So I think they are due to the COVID, many people change the working style. So many people can work in a variety of places, such as remote working or working in a co-working space or something else. So, but on the other hand, so especially in Japan, the salary or payroll or reward condition is highly inflexible. highly inflexible one. So that's why we are closely studying the future change of the working conditions, more flexible payment conditions. So in this context, so we are closely studying with the Georgetown University Matsuo Sensei or Jim. So especially if, as a first step, so we are studying the working conditions of the U.S. So U.S. is very, lived in the variety of people. So there are a lot of working conditions there. So, but of course, in the future, maybe people would like to get the money or salary payroll by crypto or by a digital money or something. So I think the U.S. is a great potential to change such kind of the payroll or a reward environment for more flexible the payment style maybe in the future. So we are closely looking at the such kind of changes of the workers market, and currently, especially in Japan, as I mentioned, the reward of the payroll system is inflexible. This is made, typically once in a month as a salary receipt. But on the other hand, US is twice in a month. Very flexible, tend to be getting money very flexibly. So I think there are maybe a different culture in the EU or maybe in Asian country or in US. But I think that we are currently looking at the difference of the such kind of the workers' condition. Of course, this is maybe for smooth getting the payment, getting a rewards and the payroll. So maybe in the future, crypto is penetrating such a kind of worker conditions itself. So that's why we are looking at the future change of the labor market. Maybe crypto will penetrating the markets. So this is my quick fast intervention. Thank you very much.
Thank you very much. All introduction is a recent activity of each company, and I would like, so we have 27 minutes for the some sort of discussion. So originally that I intentionally added that words of soundness, the sound blockchain-based financial ecosystem. So I'd like to discuss something about that soundness, because that last year, that there was a FTX problem, and or so there are at that time in the society, so we had so many question marks on the soundness and trustworthiness in that blockchain-based ecosystem. And so today, so in a few hours ago, we had a news that that CZ of the Binance CEO stepped out, and it's a tipping point for blockchain ecosystem to prove that how sound that the blockchain-based financial system or something like that. And so of course we need to regain the trust to the society, and it might be the technology might be as a part of that tools to increase the trustworthiness of blockchain ecosystem, or so we should have another types of the tools to increase the trustworthiness to the society. And I would like to ask that, so Mark and Matthew first, because that in the presentation of the Casper network, so many technology regarding the verifiability or trustworthiness is a key of that, main part of that Casper network technology. And I think that the Casper network believe that the technology could help improve that kind of trustworthiness of blockchain-based ecosystem. But so, could you let us know that your thoughts on that, how technology could help, or do we need other types of tools?
Well, in the context of what we're trying to do with the Actors Framework, it's quite clear that verifiable financial contracts are in reach, that once you have machine-readable terms, you have standardized algorithms over those terms, and then zero-knowledge compute spaces in which you can, have proofs of computational integrity, then, not just at the financial contract level, but the portfolio level, you can have these kind of recursive proofs. And that actually is an innovation. It does give auditors, regulators, some tools for machine-driven auditing scenarios, compliance scenarios, regulatory scenarios. And I do think it's a material contribution to improving financial stability, because if we look at what happened in 2008, for example, in TradFi, irrespective of what's happening in DeFi, it was massively opaque financial portfolios of derivative contracts on derivative contracts, so, highly problematic. But we don't want information leakage where that doesn't make sense, right? So we do need to respect privacy between counterparties when they are conducting legal business. So, that's the kind of material contribution, really, is this verifiability of financial contracts. Yeah.
Thank you. Okay, Matthew, do you have a same other addition?
No, I mean, I don't have that much to add. Basically, what we see blockchain is capable of is providing algorithmic solutions to the basic observation that there needs to be algorithmic standards for legal or for financial contracts. So what I see is there's like a wider social discussion that we need to have around like how we conduct business, running blockchain, like how we run like centralized blockchain businesses, right? Because like we've seen now that there's need for reform, but then there's like what we are at the Casper R&D team are looking at are like technological applications. So there's absolutely there is a profound opportunity for the technological applications to change the way that society works. But we also you can't. We also have to address the fact that right now there are huge social problems with these centralized entities and the centralized some of the centralized players. We have Circle here, and I get all my payments in USDC. So I can't we have to acknowledge that we have to acknowledge that there's some bad actors.
Okay, thank you very much. And Leo, so same question for you, but so you have tons of work for that. But that in addition to the technology tools to improve that trustworthiness, but so as I imagine you are doing that kind of works well. But so communication with other stakeholders are more important. But so let us know that your thoughts on that. So regarding that, so other way to increase the trustworthiness of DeFi space.
Absolutely. Yeah. Thank you, Professor. And Matthew, I'm glad we're doing everything we can every day to earn your trust and obviously, a global trust. I think your point, Professor, is a profound one. We have always prioritized kind of a regulation first posture and being transparent and fomenting and fostering trust with public authorities. But the reality is, as a industry, as a broader industry, whether you're interacting with centralized actors that purport not to be, but in fact are, we need to have a kind of come to Jesus moment on aligning around the standards that we expect of ourselves as an industry, right? This means prioritizing transparency, accountability, and following the rules that are in place, right? So we need to, as an industry, finally kind of dismiss the sordid past that unfortunately has become what a lot of people associate with DLT technology, right? So we need to have a kind of, I think, as a community, an acknowledgement of what is fair game and what is not. Once we do that, I think it's very important to continue to educate users and regulators about the technology. The reality is, I'm based here in the US. I work a lot with US policymakers, and the level of understanding about this technology and its potential and its risks is very uneven, right? So we firstly need to kind of establish ourselves as a broader industry, what is acceptable and what is not. And then on that basis, we're going to be in a better position to go out there and educate users and policymakers and audiences about the technology. And in that way, kind of advocate for sensible rules and standards. And this is only going to happen if, again, we as a broader community acknowledge what needs to be acknowledged.
You can double click that the issue of the education. Education is more important, and it might be easy problem, but it should be difficult problem for everyone to educate other stakeholders. And I
Can
guess
I just
that,
say something very, very briefly to build on what was just said, that it's education is one thing, but also the crypto industry and actors need to really understand their own groupthink and really embrace self-critical thinking, because I've seen an awful lot of ideological, kind of bias. I see an awful lot of people who are very successful and assume that success will continue. And also I see a lot of actors who don't really take social responsibility seriously enough, and focus more on gains rather than impact. So these are kind of, just building on some of the comments there.
Thank you. And thank you very much. And my question to Leo is that, so is there any successful case of educating policymakers or other stakeholders? So educating other stakeholders usually hard things, but if you have some any successful lessons to educate other stakeholders, so please let us know.
That's a great question. I mean, I think the fact that you are beginning to see robust, sensible approaches to digital asset regulation in a lot of jurisdictions globally means, people are starting to get it. It may not always be perfect. It may not always be kind of exactly what we might advocate for, but we're beginning to see that acknowledgement, and I think an understanding that this technology is here to stay. The reality is, Professor, it's hard really to cite kind of public examples, because oftentimes we find ourselves being most effective when we're in a position that we can be kind of consultative and really meeting personally and on an ongoing basis with people who have questions and want to understand the technology, but again don't want to be seen to do it in a fashion that is necessarily going to compromise them. So it's a really great question. It's a difficult question. I think part of what we can do in a more kind of public lens, and this gets to Mark's great observation on kind of groupthink, is look outward and try to think about how making this technology and its potential accessible is a way to kind of help educate and interest people. So, there was an example from DCJPY on digitizing non-fossil certificates. That's a great example that is going to be kind of practical and tangible to people, right? Financial contracts, very tangible. In the case of Circle, right? Making payments, cross-border payments faster, more efficient, lower cost. For a lot of people, that's going to be very, very tangible and relevant. Maybe not everyone, in the US, for example, a lot of people are not necessarily interacting in that fashion as maybe other markets are, but all the same, thinking about ways to make the use case and the utility more tangible. That's one of the really effective tools that we have to kind of broaden education. So it's not just a story of, the bad actors in the space.
Thank you very much. And okay, it's a question to Yamaoka-san. That the DCJPY and so this digital currency forum is so the forum with over 100 companies, and so that your forum is doing a lot of job to create that common understanding or educating each other. And I think you have that a lot of the successful case to have the main common understanding by different types of stakeholders. So could you let us know your lesson learned from the past activities?
Yeah, and of course, in addition to the FDX cases, we Japanese experience the Mount Gox cases and Coincheck cases, and they are not the technological problems themselves. They are, how to say, very close to the traditional financial problem, like how to say, in terms of the duty as a custodian or duty as an agency. So, of course, it's quite important to share the normal financial common sense among the participants. And at the same time, of course, we share the past experience in Japanese regulation and supervision. And at the same time, we study the securities by establishing a subgroup about the security of the decentralized system led by the Japanese leading securities firms and share those understanding among the participants. And at the same time, of course, the establishing the trust is costly in some sense. So DCJPY is a tokenized deposit type scheme. So in that sense, we share the burden of creating the trust with traditional financial frameworks, including the bank supervision or bank regulation or deposit insurance, in order to maintain the trust of whole our system. So building trust is a very complicated procedure. So how to share the burden of creating a trust will be a very important issue among creating the decentralized framework. Thank you very much.
Thank you very much. And so I would like to ask Mia-san the same question. But so you have that, so the experience at JFSA as a regulators, and currently, so we are working at the commercial companies. And so could you let me know your thoughts on that? So how to educate each other, also how to improve the trustworthiness of the blockchain-based financial system by multiple stakeholders?
Yeah, I think let me my brain is back into the sort of regulators. So maybe in 2018 to 2017, so we have started discussion on the multi-stakeholder type of conference. This is based on the invitation only, and but there are many supervisors, academics, developers that gathered in the same place. Maybe this is in 2018 itself. So we JFSA hold the discussion on blockchain roundtable starting from the 2018. So after that, we have expanded its capacity of the roundtable to 2019 or something. So we enhanced the discussion among the stakeholders. So at that time, luckily, so we have a momentum of the G20 2019 at this time. So Japan is the presidency of the G20. So we can use this momentum to to create the environment for the further collaborating between the regulator and the more business side regulator itself. So that's why we started with create BGIN. This is the first step of the the multi-stakeholder type of environment itself. So, but currently, this is based on the incident of last year's the incident. So I think the regulator is sometimes still have a stringent way or stringent treatment to the commercial side. So at that time, so in this type of moments, so maybe environment tend to be a more kind of the lack of tend to be being the lacking of the communication between the regulators and the commercial side. So, but of course, based on my experience of a supervisor or a regulator, so kind of the enforcement is important for of course important for regulators, supervisor. But on the other hand, we should continuously create the environment of the communication between the regulator and the commercial side. So currently, I think my current image is that we are, especially in the US, lacking of the communication between the regulator and the commercial side. So we have the communications first.
Thank you very much. And so I have another sense of education. So we discuss about educating other stakeholders now, but so the other aspect of education, educating young people. That many blockchain startups or DeFi startups are composed by very young people, and in some cases, so those young people do not have that financial common sense. It's a so what is the goal of a financial system, and so what is the consumer protection, something like that. And educating young engineers might be important things to make that this so the engineering community or the blockchain business community more sound. And so I'm not sure that so in Circle that so there is such kind of that activities are there, but so do you have some idea to how you educate young non-experienced engineers to have the financial common sense or the experiences? Mark or Lurio, do you have some thoughts on that?
Could you just repeat the last part of the question again, sorry?
Okay, so my question is that so we need to educate young engineers. So
yeah, young engineers, yeah, exactly.
Who doesn't have
so
that
exactly. I mean, it's a good point because software engineers are not financial engineers. They need they don't have much understanding necessarily of microeconomics. They don't necessarily understand complex instruments. They don't necessarily understand that they may be introducing like weapons of mass destruction into the potentially systemically relevant macroeconomic infrastructure. So absolutely, education for the engineering guild, if you like, is super important. In our little team, we're obviously way ahead of that particular curve because we're dealing, we put this financial standard right to the front of what we're doing, and everybody in my team is being trained and educated because they need to be trained and educated, just to be able to be effective. But it's not true for all projects, that's for certain.
Thank you.
There's really no easy answer, I think, but it's a profound question, Professor, and an important one. I think there needs to be, perhaps an acknowledgement that this technology may be new, but human nature and the foibles of human nature are the same, whether they're today or 2008 or 1929 or whenever they might be, tulip mania. So this is a really difficult question, right? I mean, Circle, we're really passionate about kind of education and broadening understanding of this, which needs to include high-end financial literacy, which I think is kind of getting to your point. But it's a really profound question that I think as an industry we need to grapple with, this recognition that we need to be sensitive to incentives and risks in a way that perhaps are not necessarily as fun for someone developing a novel piece of technology, but we need to kind of have the wherewithal to share and coach each other's, like, pump the brakes, let's stop, let's think about this, do we understand what could go wrong, and to just kind of have that risk management and that culture of risk management. It's not very sexy, but it's important.
Thank you very much.
It's like a tortoise mentality rather than a hare mentality. It's kind of trying to be the.
And Miya-san, as a lecturer at the Tokyo Institute of Technology, you have that class for the graduate student to educate the DeFi or something like that. So what is your experience in educating that university student?
Yes, but I'm as a lecturer, so my lecture is relating to the technical, not technical issues of the blockchain structure itself, but my lecture is relating to the more economical or economics based on the decentralized financial system. So as a regulator, I'm experiencing the situation of the incumbent financial market. The current market is based on the centralized way, but on the other hand, so the market is changing the shift. Shifting the environment to the more decentralized way. So my lecture is relating to the change of the situation of the financial market, and economical consequences or something. So we are currently considering the such a kind of the change of the market itself. So we are providing especially for Tokyo Tech. Tokyo Tech is a very technical. There are a lot of technical students or something, but of course, some people will will be going to the engineering market, especially the crypto or financial market itself. So I think I personally provide such lecture to the people for proper understanding of the financial market or future change of the market and proper consideration for the economic consequences based on the decentralized financial market itself. So this is
Thank you. And we are almost running out of time, but so I would like to take one quick question from audience. Is there anyone who has a question or comments? No? Okay, one.
Hi, everyone. My name's Anna. I just want to hear a bit more about how we could see getting closer to having a sufficient level of informed consent among end users, because that's a big thing that regulators are considering right now.
Is there anyone who want to answer that, or Leo or Mark?
Yeah. So,
Okay.
by informed consent, do you mean like, for instance, proof of funds that that some exchanges use? What do you mean by informed consent exactly?
I just mean a level of understanding that you can be confident that they're going into this understanding the risks, and it's their free decision to engage with that risk.
I think one innovation that we're kind of seeing playing out at the moment is intent-based architectures and systems. And in like blockchain systems right now, when you interact with them, you dispatch a transaction into the network, and you hope that the transaction will be processed and have the side effects that you were planning. But in an intent-driven system, you kind of start from the from the end result to say, only process this transaction or intent if the side effect will be as I want it to be. Do you see what I mean? So in that kind of setup, I think informed consent is implicit, because it's the intent of the end user is, the system must obey that intent. Whereas right here, right now, for example, in the Ethereum space is a good example with MEV, etc. You have a lot of information leakage which can be stroke abused by MEV bots. And so, even if you have well-educated users, their intents are not necessarily respected by the systems. So that would be a comment there.
Okay, thank you very much. And it's okay.
As a lecturer of the Tokyo Tech, so we create the opportunity for the discussion of the how we manage the decentralized financial system, or how we supervise the decentralized financial system. So many students said that we'd like to know the more detailed about the opportunity or risk of the each product. So many people said that many students said that the white paper is very important. Currently in the DeFi market, there are a lot of the white papers out there. So when the new product is released or launched, but there are a variety of contents of there. Yeah, not stating in a standardized way. So many students said the more creating the clear disclosure practices on the white paper itself. So opportunity or risks on the technical aspect or something. So this is a one step for the future informed consent of the product sales. This is just a
okay.
Yes.
Thank you very much. And we have already 4 minutes past 11. Thank you very much, everyone, to join this discussion. And I hope you have a great rest of the day or good night, or something like that. Thank you.
Thank you.
Thank you.
Thank you. Thanks to everybody there and the other panelists. Thank you.
And we have the next session will start 11:30, and we have 25 minutes break